Welcome. In this video, can XCN go up 900% and multiply our money? We will analyze this. Don't forget to subscribe and like. And please watch to the end to understand.
First of all, in a scenario where the price is trying to form an uptrend, this indicates a very promising outlook from a technical analysis perspective. The beginning of an uptrend shows that buyers are gradually becoming more dominant in the market, while sellers are starting to lose strength. Technically, an uptrend is defined by each new low being higher than the previous one and each new high being higher than the last. This structure reflects buyers' confidence in the market and signals that higher levels may be targeted in the future. If the price manages to hold above this upward trend line, it becomes not just a price movement, but also a strong signal of confidence from a psychological perspective. In the minds of investors, the thought, "the bottom is behind us, what comes next could be upward," starts to take root, attracting more buyers into the market. In other words, the ability of the price to hold on the trend line creates a chain psychological effect, paving the way for a strong rally. At this point, the strength of the trend line becomes highly critical. Trend lines are not just random lines drawn on a chart. They represent areas where buyers have repeatedly defended the price, showing strong demand at those levels. Therefore, if the price reacts upward every time it touches the trend line, it proves how disciplined buyers are in defending the market. The trend line, in this sense, acts almost like a fortress wall. Every time the price pulls back, buyers step in, reducing the pressure from sellers and pushing the price higher. If this defense continues and the price manages to stay above the line, the market's upward momentum increases. This is the preparation stage for a strong rally. In short, if the price can hold on the trend line, it signals that a breakout moment is approaching and that buyers are becoming bolder. For the price to hold during this process, volume is also very important. Sustainability of an uptrend is not just about chart structure, but must also be supported by trading volume. If the price bounces upward when it touches the uptrend line and volume increases simultaneously, this indicates that buyers are much more determined. Rallies without volume support are usually weak and tend to fade quickly. However, if the price keeps bouncing upward on strong volume in an uptrend, it shows that large players are entering the market. This suggests not only retail traders, but also institutional investors are taking long positions. In such a scenario, the price has the potential to make stronger moves upward in the future. Additionally, the psychological side of the uptrend line should not be overlooked. Many investors see the same trend line and position themselves accordingly. In other words, in technical analysis, trend lines are not only an individual forecast, but also a symbol of collective expectation. If many investors start buying when the price holds at the trend line, it accelerates the upward momentum. A domino effect takes place. The first wave of buying triggers more buying, driving the price higher. As long as the price stays above the trend line, the upward path remains open, creating strong rally potential. The formation of an uptrend can often be a signal of trend reversal, especially after a prolonged downtrend. When the price finally starts forming higher lows, it shows that buyers are beginning to take control of the market. This signals a potential change in trend direction. If the price can hold on this newly formed uptrend line, it is no longer just a short-term bounce, but can turn into a medium to long-term upward movement. In such a reversal, the first rally is usually very strong because built-up selling pressure gets broken and buyers seize control. This is why the price holding on the uptrend line is vital for the beginning of a rally. In technical analysis, the price holding at an uptrend line is often referred to as a successful support test. A successful support test proves that buyers remain strong and that sellers are unable to dominate. This is an important indication that the uptrend may continue. The more times the price successfully tests the trend line, the greater the confidence, because it shows that buyers are consistently supporting the market. In such trends, the probability of the price starting an upward rally is much higher. As long as the price remains on the trend line, it can gradually move to higher levels, with each rise creating new momentum. The price launching an upward rally while holding on the uptrend line usually happens step by step. At first, there may be a small bounce, followed by another approach towards the trend line. However, as buyers step in each time, the uptrend becomes more solid. Each touch of the trend line during this process serves as a test for buyers, and as long as these tests are passed successfully, the sustainability of the rally strengthens. At a certain point, buyers' determination completely breaks the resistance of sellers, and the price accelerates sharply upward. This type of rally often turns into not just a short-term move, but a medium-term uptrend. To sum up, when the price is attempting to form an uptrend, its ability to hold above the line is a very critical signal. This is not only a technical structure, but also the combination of investor psychology, market dynamics, and buyer strength. As long as the price stays above the line, confidence in the market grows, buying appetite increases, and sellers' resistance weakens. When all these elements come together, a strong rally becomes inevitable. This rally typically pushes the price to much higher levels, opening the door for new opportunities for investors. But we can't rely solely on trend lines for analysis, so let's take a look at other metrics as well. Stay tuned.
The fact that a bullish order block has formed at the current price level is actually a sign of a strong area where market makers and large institutional investors previously executed long positions. The order block structure, especially when bullish, plays a critical role in allowing the price to continue its upward trend. This is because these areas are usually where liquidity accumulates, where buyers strongly entered the market in the past, and where they hold potential to re-enter. When the price reaches such an order block level, it is expected that the same players will step in again to take long positions. This leads to the market reacting upward and allows the existing trend to strengthen and continue. If the price manages to bounce from here, it shows that the bulls still hold control and that the upward movement will expand further. The positive picture created by a price bounce from a bullish order block zone is also highly important in terms of investor psychology. Market participants perceive this level as a strong support, and if the price holds there, confidence in long positions increases. In such a situation, buy orders intensify in the market, and the upward momentum of the price accelerates. When this momentum is supported by other indicators in technical analysis, it shows investors that larger targets may be possible. A bounce from a bullish order block zone is not limited to a short-term reaction. On the contrary, since these areas are where large players collectively take positions, the price may bounce from them multiple times. In other words, these zones act almost like a magnet for the price, with a high likelihood of being retested during each pullback. This allows the price to make healthy corrections within an uptrend, shaping a stronger upward curve. In this context, bullish order block levels stand out not only in technical terms, but also in terms of market structure. These areas most clearly demonstrate the determination of the bulls and the strong will of the buyers. If the price manages to bounce from this bullish order block level, the likelihood of reaching new highs increases along with the continuation of the trend. Such zones are considered areas where the market refreshes its upward energy and prepares for the next rally. Therefore, for investors, these movements are not only short-term profit opportunities, but also signals of long-term growth. In particular, large volume buying triggered at bullish order block levels confirms that the price is being lifted from strong support and clarifies the market's overall direction in favor of the bulls. The formation of such a structure is also an indicator of the market's healthy functioning. The price does not simply rise and fall uncontrollably. It pauses at certain levels, gathers strength, and then continues in its direction. Bullish order block levels are the areas where the price pauses and consolidates. When the price bounces from them and gains upward momentum, a balance emerges in the market, and participants act with the knowledge that the price is being supported by a reliable base. This makes the market more predictable and stable. Considering all this, the emphasis on the price needing to bounce from the current bullish order block level is highly meaningful, because if the price fails to bounce from this zone and breaks downward, it would indicate that the bulls have lost control and the bears are beginning to dominate the market. However, given the current structure, buyers are expected to step in heavily at this level, making the bullish scenario stronger. Market structure usually works in favor of the bulls at bullish order block zones, which is why a bounce from here aligns with market expectations. In addition, the price bouncing from a bullish order block level directly affects investor strategies. Especially for long-term investors, these zones offer highly suitable opportunities to enter the market. When the price begins rising from strong support, risk is minimized, and investors gain the advantage of joining the uptrend at an early stage. This is why many professional investors carefully monitor order block levels and focus their long strategies around them. One of the long-term results of a bounce from a bullish order block zone is the strengthening of trust in the market. As investors see the price bouncing upward from strong support, they perceive the market's bullish structure more clearly. This creates a positive atmosphere and paves the way for new investors to join the market. As a result, both the market's volume grows and the upward moves continue more steadily. In conclusion, the formation of a bullish order block at the current price level and the potential for a bounce from here is one of the most important building blocks of technical analysis. Such a structure has the power not only to determine the short-term reaction of the price, but also the direction of the long-term trend. If the price manages to bounce from this level, it shows that the bulls remain strong in the market and that the upward movement will continue. Therefore, under current conditions, a bounce from this bullish order block level stands out as a scenario supported by the overall positive market outlook.
W pattern is a strong reversal formation frequently observed by investors in technical analysis, providing important clues about future price movements. The most notable aspect of this formation is that it generates very strong signals indicating that the price may enter an upward trend after testing its lows. In the scenario you mentioned, if the price returns to the point where the W pattern began, it suggests an extraordinary potential rise of approximately 900%. This signals not only the geometric movement of the price on the chart, but also the psychological dynamics of the market, the re-entry of buyers with strong momentum, and the support of significant capital. Examining the structure of the formation, we first see the price making a low, showing the power of the sellers, followed by a reaction as buyers step in and push the price upward. However, this initial reaction is often not permanent, and the price moves downward again to retest the low. At this point, a second low occurs, often very close to or slightly above the first low. This indicates that the market is no longer dominated by sellers and that buyers are beginning to gather strength. In other words, the second low represents a strong accumulation area. For this reason, the W pattern is considered one of the reliable indicators of the long-term direction of the price. Now, focusing on the possibility of the price returning to the point where the formation began, if the price tests this level, it represents not only a technical success, but also a psychological breakthrough in the market. The starting point of the formation is where buyers first emerged and sellers lost dominance. A return to this level creates a significant sense of confidence in the market, prompting investors to take bolder actions. This confidence acts as a strong catalyst that can drive the price upward dramatically. The potential 900% increase arises precisely from this. Once the market's breaking point is surpassed and the W pattern is technically complete, there is no significant obstacle to the upward movement. Such a high potential increase should be analyzed not only graphically, but also in terms of supply and demand. When an asset has been under pressure for a long time and forms a strong structure like the W pattern, many investors have sold their holdings and exited the market. After these sales, the market reaches saturation, leaving few sellers. In other words, selling pressure drops to a minimum. Meanwhile, as buyers begin entering the market heavily from the second low, supply tightens while demand rises, pushing the price rapidly upward. Investors' attention remains focused on the starting point of the formation, enabling a continuous rally up to that level. Additionally, the W pattern has historically preceded significant price surges. Looking at past charts, across asset classes, from cryptocurrencies to stocks, extraordinary increases have occurred following the completion of a W pattern. Therefore, the potential 900% rise is not merely a prediction but a possibility indicated by numerous historical examples. Especially in the crypto market, limited supply and intense investor interest make such a rise both technically and psychologically feasible. At this point, it is important to examine the psychological dimension of the formation more deeply. The W pattern represents the emotional cycles of investors. The first low is the region of panic selling and prevailing despair. The initial upward reaction represents hope returning and investors regaining confidence. However, the subsequent second decline may drive many investors into fear again, increasing the expectation that the price will completely collapse. Yet, technically knowledgeable investors who understand market psychology see opportunity at this point. The second low shows that the sellers are running out, and the greatest opportunities arise where fear is highest.
As the price moves upward from the second low, market confidence strengthens and investors begin buying aggressively. This represents the formation's most critical reversal point. If the price continues rising and reaches the point where the formation began, it represents not only a technical achievement, but also a psychological victory in the market. Investors believe that the price has entered a sustained upward trend. This belief increases market momentum and attracts new participants. As the number of investors grows and new capital enters the market, the price can climb even more rapidly. This chain reaction paves the way for a massive 900% increase. The W pattern is also one of the strongest signals of trend reversals. If the price returns to the starting level of the formation, the likelihood of a sustainable rise from this point is very high. Many of the market sellers will have already exited, giving buyers a significant advantage. In other words, the upward movement is not just a short-term spike, but may mark the beginning of a long-term trend. This can create historically significant opportunities for investors, particularly in the cryptocurrency market.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.